Hi, are you thinking about getting a mortgage? You want to buy a home, but you don't even know what questions to ask. Well, I just did a great interview with Leslie McGarry. She's one of my favorite lenders here in Las Vegas, and she'll be able to answer all the questions you have and some that you probably didn't think about. Stay tuned. I am here with Leslie McGarry,
Good morning.
Hustle and Heels in Las Vegas, and I'm going to ask her a few questions about mortgages and about getting loans because I know there's a lot of questions, and sometimes reading it on the internet, it's kind of confusing. So she will break it down in layman's terms. So my first question is, how much are closing costs here in Nevada?
So I always estimate closing costs between 2 and 2.25% of the purchase price. And that gives us a pretty good estimate, give or take $1,000.
And do closing costs vary based on the loan type?
Closing costs vary based on the purchase price, not based on the loan type, because you've got title insurance, escrow fees, processing and underwriting are exactly the same on every loan product, no matter what the loan product is. But basically, it just depends on the actual purchase price.
My second question is down payment. A lot of people think they need 20% down to buy a home. Is that true?
No, that actually is a myth. There are multiple products out there. Even if you're not using down payment assistance, you can actually do a conventional loan with 3% down if you're a first time home buyer. 5% down if you're a reoccurring home buyer, 0% down on VA. So there are multiple products out there. And so, no, the 20% down comes from not having mortgage insurance. So if you're going to do a conventional loan and put less than 20% down, you would have mortgage insurance. And mortgage insurance is really based on your credit score.
Is there any programs that help first time home buyers with their down payment?
Yes, lots of down payment assistance programs out there. All of them have a little bit of their own idiosyncrasies. So you definitely want to work with someone that's experienced with them. So there are culinary programs that will give you $20,000. There's home as possible programs that will give you up to a 5% grant. There's in-house programs for each individual lender. Some of them are repayable. Some of them are forgivable. Some of them are silent seconds. So it really is very client specific, but working with someone that's experienced with down payment assistance programs, you'll be able to find the right program that fits you best.
My next question is, what about interest rates? Interest rates have been a hot topic lately. Can you break down what affects them and what buyers need to know before locking it in?
Yes. So interest rates are affected by obviously the economy, inflation. And so, they raise interest rates to bring the economy back into line. They're driven by the Fed Reserve. They do not control mortgage interest rates. The Fed Reserve controls the interest rates that the banks borrow money at. So the banks can borrow the money from the Fed Reserve, and then they borrow the money out to the clients out for the mortgages. So no, the president doesn't, they have no effect on the interest rates. Interest rates are definitely a hot topic. Everybody thought that we were going to have a rate reduction this past week, which we did not. But what we do know is home prices are always going up. And so no matter what the interest rate is, you can always refinance when the rates do come down. But there's a lot of factors that push and drive interest rates.
What does mortgage covers? Because when buyers hear mortgage payment, they often just think about the loan, but there's a lot more to it. Can you break down what's actually included? And is it possible that mortgage payments can change over time?
Okay, so when you're quoted a payment on your mortgage payment, it should always include your principal, your interest, your property taxes, your homeowner's insurance. If you are doing a conventional loan with less than 20% down, it will cover your mortgage insurance. Now, mortgage insurance and homeowner's insurance, very different things, cover two different things. It will also cover if there is FHA mortgage insurance. So when you're quoted your mortgage payment, always ask if it's an all-inclusive. That should cover principal, interest, property taxes, homeowner's insurance, and if there is any mortgage insurance. And flood insurance if that's required, but that's generally not in Las Vegas.
Sometimes I get asked, especially from my California buyers, can you pay your insurance separately from your mortgage?
Okay, so 10 years ago, that used to be an option, and that what that is called is escrow. So we create escrow accounts that cover property taxes and homeowners insurance. They frown upon that now, and there's a reason. When the crash happened, people stopped paying their homeowners insurance or their property taxes, and that now puts that asset at risk. If something happens to that home, let's use California fires for instance, without homeowners insurance, the asset for the bank is no longer protected. Meaning, if something was to happen, you wouldn't be able to pay back the mortgage to the bank. So they have pretty much across the board eliminated the opportunity for clients to pay property taxes and homeowners insurance separately. They want it escrowed so they know it's being paid.
What loan programs are best? There are so many loan programs out there: FHA, VA, conventional. How does a buyer figure out which one is the best fit for them?
That is probably one of my favorite questions, and that is really based on the client. What I usually do is I have an initial intake with the client, kind of get their short-term and long-term goals. Somebody that's a young family that just got married's goals are going to be very different than somebody that is on the brink of retiring. Um, my job as an expert in our field is to find the right program for these clients. Not every program fits every client. And so I kind of take the big picture plus everything that we talked about on the intake, and I find them the right program. Not every client is going to qualify for each individual loan, if that makes sense.
Yes, it does. Thank you. How does a mortgage work? For first time buyers, the whole concept of a mortgage feels overwhelming. Can you break it down in simple terms? How long does the mortgage approval process take?
So generally, if you speak with a mortgage professional, and I'll talk only for myself, I get the introduction to a client. I'll do a quick 15-minute intake, and then I have the loan application completed. I always tell the clients up front, it's going to take me 24 to 48 hours to do a real pre-approval. I don't do pre-qualifications. I do a real pre-approval. The reason I give the buffer to 24 to 48 hours is if there's been multiple jobs over the years. I get all of the verifications of employment in. I order the tax transcripts. I do all that needs to be done up front to make sure that when you have a mortgage approval letter in your hand, you know that you could go out and confidently shop and you'll close on a mortgage. The process itself, from the time that you go into contract to the time that you close, generally takes between 21 and 30 days. In that 21 to 30 days, there's a lot of steps that happen. File goes to processing and then to underwriting. We order appraisals, we get property inspections, we order homeowners insurance, check flood zones. So there's a lot of things that happen in that 21 to 30 days. But generally, from first intake to closing, we look at about 40 days total from the initial application process.
Is there a prepayment penalty? Let's say the buyer wants to pay off their loan early. Are there penalties for that?
Most mortgage lenders do not put clients into prepayment penalty loans right now. There are some specialty programs out there, DSCR loans and hard money loans and things like that. Your mortgage lender will generally ask you to make 6 payments, which essentially means 7 months in that mortgage. And the reason being for that is there is a penalty to the company and to the loan officer personally if the mortgage is paid off before the 6th payment is received. There are other options for clients that want to pay off mortgages or if they want to put a principal reduction down, but generally, no, there is no prepayment penalty on a mortgage.
What are mortgage points? I hear a lot of people talk about buy down their interest rate with points. What exactly are mortgage points and when does it make sense to actually use them?
Okay, great question. So mortgage points are it's the amount of money that you would spend to buy down on the interest rate. So if we're going in today and the interest rate is 7.5%, and you want a lower payment, so we need to get you to 6.5%, we have to figure out the spread of that one full point and what it would cost. The misconception is you get dollar for dollar, meaning for every dollar you get a percentage off of the points, and that's actually not how that works. So if we're looking at just that scenario that we need to do a 1 point reduction, it's not 1% of the purchase price or 1% of the loan amount. I just did one yesterday. It was an $8,000 cost to get a half of a point. So it's not always the right idea. Okay. So for me, if I've got seller paid closing costs, or we're really tight on the debt to income and we need a little bit of movement in the interest rate, we'll have that discussion. I generally, in this environment, are not advising my clients to use their own funds for rate reduction, because once the money is spent, the money is spent. You don't get that money back immediately if you say sell or refinance the house. That money is already spent. What I will tell them to do is take that extra money that they may have had and put it aside, pay the little bit of difference in the higher mortgage payment, and wait until it's time to refi. And then if it makes sense to use their money on a refi for a permanent buy down, then I would suggest going that way. But right now, the rate environment is too volatile, and we are hearing that we may have rate reductions this year. So spending money just to spend money doesn't make sense for most people.
And the very last question that I get more than anything is, what can I afford? A lot of buyers ask, how much home can I actually afford? What's the best way to figure that out? What are some key financial factors lenders look at when determining a buyer's affordability?
Okay, so I use a very simple equation when I explain this to my clients. If you have $4,000 a month in income, remember, we go off of your top line pre-tax. Okay. So if you have $4,000 a month in income, cut that in half. That's $2,000. So basically, the math says should be able to pay your mortgage and all your bills with that $2,000. That's 50%. So when you hear debt to income, they usually go up to 50%. So that's the quick equation. If you're making $10,000 a month, you have $5,000 to all encompass your bills and your mortgage. And that's the easiest way to calculate that in your head, to kind of know. I never want to tap somebody all the way out, because being house poor sometimes is a real statement. So always working with a professional that will help guide you. And again, understanding what your needs are and what your goals are is super important for your mortgage lenders, so that we know how to guide you. So if this is like a home that you want to purchase and maybe only stay in 2 years and you're planning on moving up, we could talk about what that looks like as far as maxing out your payment.
Well, Leslie, this was so helpful. There is so much to consider when it comes to financing a home, but you made it so easy to understand. If someone wants to get pre-approved or has more questions, what's the best way for them to reach you?
I'm always available. So you can call me, text me, email me, WhatsApp me, find me on social. I'm always available. I'll always answer any questions. Even if someone is working with another lender and they just want a second set of eyes on it, I will always just help the clients, make the best decision for themselves.
Thank you so much, Leslie, for giving us this information.
Thanks, Crystal. I really appreciate the opportunity to talk to you and your clients.